So we of course recommend that practice owners start with the very basics, and that is keeping track of their receipts, right? The credit card statements don't count if you're audited. You need actual receipts, whether those are physical or digital. Those are important to hold on to. We also recommend that practice owners all their business meals with who they had the meal with, what the purpose was, the date, all of that, as well as a mileage log if they are using their car for the practice. And then we recommend keeping track of everything in an accounting software, keeping it up to date and reconciling it at least on a monthly basis. That way they're getting regular data that they can use. And we recommend our clients to kind of set aside time on a regular basis to look at their financial statements, really dig in and understand them. If they have someone that can help them with that, that's great. But really use that information to help make important financial decisions for their business, because that's the point of tracking all of this, so that they can use it to help make those decisions that will help them grow and thrive. In order to transition from paper to digital, one of the first things we recommend is that practice owners contact all of their vendors and ask if they can send their invoices or bills to them via email. And that way that have them in digital form already. We also have a client portal for our clients where they can send receipts via email or through our app. They can either forward it just via email, or they can take a picture on their phone and send it in that way. There are other ones out there called Dext and HubDoc that practice owners can use too. So we really recommend those as ways to help keep everything straight. That way you're not having to hold on to physical papers for the long term. So it's kind of a transition process, but the more that you get digitally, the easier it is to keep it all together. We recommend that practice owners have, of course, a very strong PIMS in place, because without that, we don't have good financial data to work with. So we, of course, that's used to track the revenue, sales, client information, billing, all of that. And then we recommend that that system has a good reporting function. So ideally, our favorite clients are the ones that have the auto send, where they can set up the reports and they come to us monthly on a regular basis without anyone having to do anything. We don't have to bother the client for it. It just comes right to us. So that's very helpful if you're looking for a new PIMS, to see if that's a possibility. Of course, making sure that it tracks inventory. And then we also recommend having an accounting software that will help track expenses and kind of bring everything together so that they can see the full financial picture, not just the revenue and inventory, but their labor and everything all together in one place. So we use QuickBooks Online, but there are other accounting softwares out there. So we recommend clients work with the AHA chart of accounts. And so that really allows them to benchmark with other veterinary practices out there to see how they compare. And within that, there is a breakdown for revenue. So you can have your different service categories, your retail, all of that broken down within income. And then we also recommend a similar breakdown for your cost of goods. And so we step in as sort of plug and play, ready to take it over for them and take that burden off their shoulders, so that they're able to really use their time for better pursuits, right? They can either see more clients, or tend to their team, or just have more free time to spend with their families. So there's a number of reasons why I think it makes sense, especially for a veterinary practice where there are so many things for a practice owner to look at. We've also seen practice owners who have a member of their team work on the books for them. And this can work well sometimes, but it can be problematic at times if that team member doesn't have a background in accounting or understand accounting principles. Sometimes they can enter things into the software, but it doesn't always jive well if it's, if the accounting principles are not understood. So that's oftentimes where we come in and help rescue things and clean things up and get things set up the right way. So if possible, we recommend right from the start. I think the most important financial metrics are, of course, the big ones. You need to track your revenue. So we like to compare that year to date. So what have you made so far this year, and compare it to the same time period last year. And then also this month prior compared to the prior year, the same month. So you're comparing apples to apples. We also recommend looking at revenue by service category. So you can see that revenue per veterinarian. We'd like to say at least 700,000 per vet for small animals and 250,000 for large animal. And then also looking at cost of goods sold, looking at your gross profit margin. So that's the value after you have your revenue and you subtract your cost of goods sold, your gross profit margin is what's left. And then, of course, your profit or your net income, that's the bottom line. That is key to be tracking. And then we also think that, client retention is really important to make sure that you're, providing a good service. And then also your average transaction value or the amount of revenue you're charging per invoice to see where you compare in that regard. So those are kind of the big things, the macro numbers that we recommend that practice owners keep tabs on at least a monthly basis. So we get this question a lot, and of course it depends on the practice and the practice size, but in general, we would say that total labor expenses should be around 40 to 50% of revenue. And we kind of look at that at, around 20% for veterinarian salaries, 20% for support staff salaries, and then around 8 to 10% for taxes. So that's kind of the breakdown there for labor. And then, of course, we have your cost of goods. Typically, we like to see those range from 20 to 25%. And then our facilities, we have like to see around 10% or less, and that does include rent. Administrative costs around 5%, and then advertising, we see around 1 to 5% for that typically. So that's kind of those are the big numbers, that we typically look at and see if they're tracking against the industry norms. For this, we do recommend that clients talk to a tax planning professional just to make sure that they are set up in terms of their structure, in terms of the way that they are filing their taxes and everything, that they are taking advantage of the most tax deductions possible. So really talking to a tax planning professional and then also a financial planning professional and asking both the tax professional and the financial planner about different retirement options and what they recommend. As a small business owner, it can be kind of difficult to navigate what that means for your own retirement. So we definitely recommend that they talk to experts in those fields and set themselves up right. Having a budget is a great idea because it sets you up with a goal and a plan. It doesn't always go according to plan, of course, but it gives you something to shoot for. And so we recommend that practice owners set up a simple budget. And one easy way to do that is, if you have an existing business, is to look at last year's numbers, really take into consideration what happened that year, and then also what is different about this coming year. Will you have a bigger team? Is the market going to be a little bit different? Do you have a new offering? What is going to change? And then tweak the numbers accordingly and really just have that set plan. It's kind of a best guess, but I think it's still a really helpful tool for practice owners to know how they're doing compared to how they planned to do. Oftentimes, practice owners do need to issue 1099s to relief vets or contractors. It depends on the relief vets and the contractors and also how they're paid. So we do recommend that before they have anyone new start, that they collect a W-9 from that person or the vendor, and that they check their filing status. So if they're an S Corp or a C Corp, they don't need a 1099. If they're paid via credit card or via debit card or Venmo or PayPal, they don't need a 1099. And so those are the kind of things to take a look at. It's a little bit tricky to navigate. So, your tax professional or your bookkeeper can help you navigate that in terms of each specific vendor. But definitely collecting the W-9 is the first step to seeing whether or not it's needed.